I think the cycle got extended. It got extended because they increased the maturity of the US government debt from 4 years to 5 years, and that pushed the cycle out longer. And so that's why the business cycle has been subdued, like Main Street's not participating, but Wall Street has. And the moment that kind of changes, which all of our forward-looking indicators suggest, feels like bananas should be on the menu. Generally speaking, the market will front run this. So we're still trying to decide when the government's going to reopen. My best guess is we will have full clarity by the end of next week. Now, whether they agree something soon, but the probabilities, the market will start finding traction. And then as it comes, it'll then start accelerating from it.
So you think we're going to hold 100K?
Yeah, and I think we will end the year a lot higher. Don't forget, last year, we didn't start rallying until November 7th. And then we did 64% from then.
Raoul Pal says the single biggest force driving everything from Bitcoin to the NASDAQ is global liquidity. Think of liquidity as the market's oxygen, the flow of money created through central bank policies, credit expansion, and tools like the Treasury General Account. According to Pal, nearly 90% of Bitcoin's movements align with shifts in global liquidity. When liquidity expands, asset prices climb. When it contracts, markets tighten, prices fall, and volatility increases. Before we continue, please like the video, subscribe, and turn on notifications for more updates. Check out our other content on crypto and digital assets, and share your thoughts in the comments. Your support truly helps the channel grow. Thanks, and enjoy the video.
The main driver of crypto prices, NASDAQ, everything is global liquidity. It's like the amount of money central banks create in the system, whether it's through the banking system itself or whether it's through other mechanisms like the QE or things like the Treasury General Account. So that is the liquidity. That explains 90% of all Bitcoin's price action, which is fascinating. The outperformance of alts versus Bitcoin is driven by the business cycle, the ISM survey. Once that goes above 50, people have more money. They start speculating, going further out the risk curve. So everything had been following the money, global M2 and global liquidity up until about July. Well, what happened in July was, firstly, the tariff thing started kind of kicking in and people were starting to get confused. But then what really happened is the Treasury began to build the Treasury General Account ahead of a government shutdown. So what that is, when they build it, they're basically not spending money out of their bank account. So it's less money going into the economy. And normally that's offset by what's called the reverse repo market. That had been already drained. So there was no other liquidity to add because they were also doing quantitative tightening, i.e. taking money out of the system as well. So we had this double tightening going on. Okay, that was going to be a short period of time when they rebuilt the TGA and then the government shut down. So now they can't even spend the money that's in there. There's like $1 trillion in the government account and they can't spend it because all the workers have been furloughed. So that means that money doesn't go into the economy. The reverse repo is drained, so there's no other offset, and they had quantitative tightening. So suddenly liquidity starts seizing up in the system and we start getting weird things going on. And so the Fed immediately said, we're going to stop QT. So that was at the margin, we're going to add liquidity. And then they've even recently today saying, you know what, we're going to have to expand the balance sheet to give the banks more reserves. So they're using the banks to increase the liquidity in the system. So now we're stuck still with them having a record amount of money that they need to spend. They need to spend $250 billion in 3 weeks or a month to pay everybody for their back pay. So that's all going to flood back into the system the moment the government reopens. And when it reopens, that's when liquidity comes back. They drain the TGA over time, but now they have a new liquidity measure, which is the ability to increase the balance sheet. And then the multiplier from the banks goes through.
Interesting. I mean, I tongue-in-cheek tweeted the other day, maybe they should just turn the government back on. But sounds like you're making the argument here where that is actually a big and important thing to go through for the markets.
You know, it's quite funny because that libertarians say, well, I've not seen any difference with no government. Yeah, you have, because numbers gone down. We've all got poorer because liquidity has been drained out of the system. But they're structurally going to change this next year as well. They're implementing something called the SLR, the strategic lending requirement, which allows them to allow the banks to keep more reserves, which means they'll buy more government bonds and allows them to lend more money. So they're trying to solve this problem over the longer term. So that's another mechanism by which we'll add liquidity next year that we didn't have this year. We really had a broken system this year because we only had the government which draws down its bank account and then builds it back up again. So it keeps going in cycles. We've always noticed this. We're like, why can't we have nice things? When the market gets to the high, it ends up coming back down again. It's because of this mechanism. But that should now be replaced going forwards.
How quickly do we see risk assets responding to more liquidity in the system? Like, is this can we be excited about December, or is this a 2026 thing?
No, generally speaking, the market will front run this. So we're still trying to decide when the government's going to reopen. My best guess is we will have full clarity by the end of next week. Now, whether they agree something soon, but the probabilities, the market will start finding traction. And then as it comes, it'll then start accelerating from it.
So you think we're going to hold 100K?
Yeah, and I think we will end the year a lot higher. Don't forget, last year, we didn't start rallying until November 7th. And then we did 64% from then. If I look at last year, from November, Bitcoin rallied 62%, ETH 74%, Sol 74%, SUI 235%. The previous year, we had the same factor. All year, we did nothing, exploded at the end of the year. Bitcoin 37%, ETH 40%, Solana 305, SUI 128. So we're 7th of November. This is where it started last time. Who knows? But, from here, we should be significantly higher.
I'm interested in where you think we are in your exponential age thesis. I don't know exactly when you laid it out. I feel like it's been out for a while. Maybe can you just give us a quick TLDR for people who don't know what that is? And then curious for you to kind of talk about where you think we are in it.
Yeah, so the exponential age thesis plays into all of this, right? The answer to this mess of demographics where global growth keeps falling because we've got aging populations, productivity goes down because old people are less productive, and debt growth is the other driver, and we reached that peak 2008. So how are we going to solve this? We're going to solve this by changing that population number by the robots and the AI. So that is coming, but that's only just started. So we've still got this everything code cycle to continue to play out, which is we have to refinance these debts because the debts are too big versus trend rate of GDP growth, i.e. there's not enough taxes to pay for it. So what they do is debase the currency to kind of make it go away. And they're doing that until the robots and the AI kick in. And we've heard that from Scott Bessent. We've heard it from Donald Trump. We've heard it from Elon Musk. It's like productivity has to pick up. And that's what it's going to come from. So that happens. My guess is we start to get a bizarre world where this starts to really affect economics by about 2030, 2032. Suddenly we'll see GDP growth accelerating, but unemployment might rise. We'll see AI agents as better investors than us. What does it mean for financial markets for us? We get to a point that I call the economic singularity, where kind of the whole economic system as we know it breaks, and we have to develop a new one because somehow we need to tax the robots and the AI. How the hell do you do that? People talk about universal basic income, but we need to solve who do we tax? Where do we get that money from? All of these issues. And then how do we deal with the fact, and this is the bigger thing, is people don't really realize is we're arguing over, do we have AGI or not? Artificial generalized intelligence. We currently have AI that is as smart as a PhD in every subject known to humanity. Right, so this is a polymath that's smarter than anybody on Earth. The next phase, because the intelligence of these models keeps like doubling every year, is we go from an IQ of like 150 to an IQ of 300. We have now replaced ourselves with the apex intelligence. The history of humanity, we have always been apex intelligence. And I have a thesis behind all of this that the fundamental purpose of the universe is essentially to convert units of energy into units of intelligence. And that's the whole evolutionary process. And what we've just created is a new superintelligence. And so we're not the apex creatures. So what does that mean for economies? What does it mean for us? What does it mean for our role in it? I'm not a doomer. I don't think this is the end. I think we just do things differently, which is about being human. What can we do that the AI can't? We're humans. It's actually not easy to bet on it cleanly outside of NVIDIA, and NVIDIA's dominance, like Bitcoin dominance over time, has to fall. So we need to see other players coming in. So where's the cleanest bet? Crypto's one of them. Why? Because in the interim, we have to debase currency. And also, agents will use crypto rails. So we kind of know where this is going. So that makes it a very easy bet. It's also been the fastest adoption of any technology or financialized technology the world's ever seen, because AI you can't directly invest in so easily. The other thing is, I try and think where the world will go. So we can make plenty of money up into that economic singularity, whether it's out of crypto, buying tech stocks, number will go up over time. There will be a period where everything corrects, the NASDAQ corrects 30%, but that's kind of noise within the overall trend. But what I'm thinking about is, what about the other side of this? What has value? Now, I think crypto still has value in that because of its use cases and how it evolves. Things like digital ID become more important. That uses blockchain rails. But I also think about the value of digital art. Because in a world where you're competing in financial markets with AGI, you have no chance. So what assets can you hold? Well, you want scarcity. So can it be a house? Yes, but houses have this demographic issues and other issues. We also have the movement out of cities into places. We have remote work, so we can move globally. But when I look at it, digital art is, if we're going to go from a $4 trillion asset class today in crypto to 100 trillion by, let's say, 2032, that's going to create 97 trillion of wealth. Let's halve that, because I'm an idiot. So you still create $46 trillion of wealth. We'll have made it in crypto. So digital assets and digital scarcity is something that we all understand. And the culturally relevant marker stones of that are NFTs. So I've been hoarding and buying as many as possible for this thesis, because I know in the future the world is more digital than today. And these artifacts, the memetics of today, the cultural stories, are going to be incredibly valuable in the future. It is so important because it leads to ASI, which is the godlike superpower, that the forces behind it are so extraordinary that it cannot be stopped. And no government, the US nor China, can allow that to happen. So whatever anybody thinks about a bubble, will prices go up too much for a bit? Yes. Will it stop? No. Will it accelerate? Yes, it has to, because the game is too big. And so if that is the case, then I know that quote from Sam Altman's CFO about, would they bail them out? No, they wouldn't bail out one, but they would bail out all of them. There's no way. So yes, you can have a bust. Of course, you'll have excess exuberance in share prices and stuff like that. But the reality is the technology is too important for all of humanity to not. So my working hypothesis is we will end this as we go into the economic singularity, when we don't even know what financial markets are anymore. What's a company? How does this all work? By the time we get to that, 2030, 2032, that will probably be the biggest bubble we've ever seen, because every single investor is going to throw in the towel to this mega trend, because they realize it's backstopped by governments. It's all the cash flows of the largest corporations on earth. It's all of the density of talent, all go into one thing. So that bubble is going to be massive, and we haven't even started yet.
Raoul argues that every major technological revolution eventually leads to excess, and he expects the AI and crypto boom to culminate in the biggest financial bubble in history, sometime between 2030 and 2032. As AI becomes essential and productivity accelerates, investors, companies, and governments will rush in. The mindset will be simple. You can't afford to be left behind. Just as the internet bubble defined the early 2000s, this next wave will be far larger, powered by liquidity, urgency, and the belief that the momentum is unstoppable. There will be downturns, of course. The NASDAQ could drop 30% or more at times. But in Raoul's view, those pullbacks will be minor disruptions within a much bigger supercycle.